how many domestic participants you can get to participate in one industry.
530 million population, unbanked population was brought into banking system.
So there are some 33 crore motor which is plying on the road right now, but only 10 crore motor are covered.
How can we make the insurance sector more relevant for consumers?
"25 years since the insurance industry was opened up, what next?" Of course, there has been much change in the last 25 years, but in the last few years, we also seen many changes, as well as from the regulator has been very proactive, the insurance regulator. So to start the discussion, the first thing I would like to ask is that since we know that the insurance amendment bill is now pending, so what kind of changes the panelists see in the amended Insurance Act? So, Mr. Rungta, if you can start.
Thank you. Firstly, let me congratulate Business Standards for completing 50 years. So there's a lot of things which the industry is expecting, and I think it is expecting across the board. One is 100% FDI, which people believe is going to be a growth propeller in the way more and more participation of more insurers can be brought to the country. See, even today in 25 years, we are a handful of insurers in the country. When you look at more developed nations, say for example, US and all, there are thousands of insurers, right? Now one of the driver could be 100% FDI, where people want to come on their own, right? See, this is a long-term business. Sometimes there are challenges on how many domestic participants you can get to participate in one industry, right? Today still there is a requirement of that at least a domestic player has to have 26% stake. Now, do you have 1,000 domestic players who are interested in this industry is definitely a question mark. So I think that's one big one, which the industry is expecting, which will bring more competition. And I think competition always helps. So that's one big one. Second is, there's a lot of talk on this composite license, which is happening across the board. I think these two are the big ones. I mean, there are many more, which I'm sure at the operating level, and there could be more depending on the line of business, whether you are health, non-life or a life organization. But I will say these two are the more encompassing one, which the industry is looking forward.
Okay. Chairman IRDA was there in the morning. He exactly talked about these points, that his point was that we need growth capital because it's a capital intensive sector. So more and more players, foreign players are most welcome. And also he talked about the composite license that it's pending with the government. IRDA has sent his suggestion. Of course, the entire industry is looking for composite. So we have heard from the life insurance player. By the way, you may have noticed we have a very diversified panel today. There is a life insurance player, there is a general insurance player, there is a health insurance player, and there is an insurance broker. So, Mr. Mathur, what are your initial thoughts on the amendments?
So, one thing is very clear that our government insurance regulator are very progressive, and we have witnessed that regulator in the recent past has become more a developer. And messaging is not only from the regulatory's end, but is also being cascaded by government to reach to the last mile to achieve insurance inclusion, the way financial inclusion was done recently. Where about, I think, if I remember correctly, 530 million population, unbanked population was brought into banking system. So 530 million, which is, I think, more than the population of UK, US, Canada, Germany. So why it can't happen in insurance? So this is the reason that I'm very hopeful and sort of expecting myself as part of the insurance fraternity that there will be times and soon where we will going to witness things like monoline insurers or sectoral insurers, and that is possible if we have flexibility, liberty given to these investors. Could be international players in insurance sector, could be institutional investors, could be private equity firms, so which would like to operate at a low scale. So like Alok mentioned about the US, where number of insurers are even 1,000 plus, and in our country where population is 1.45 billion, we have in non-life side only 25 insurers or 6-7 health insurers or some 25 life insurers. So all put together are not sufficient or enough to reach out to the entire population. So I'm very gung-ho on the kind of insurance scope from the insurance companies setting up shop will going to get widened.
In fact, we have seen new licenses being given in the last few years, and that came after a long gap, isn't it? I think the life side after 10 years, and the general side after 5-6 years. So that's a very good development. Mr. Vohra, what are your thoughts?
From our perspective, from brokers' perspective, obviously, perpetual license is what we are looking for. So in our case, the license has to be renewed every 3 years. So that's a process, and probably, the business continuity is being hampered because of, the lack of, the process and all that. So probably if this goes through, probably the distribution will get a new flip, and there's a lot of investment which would come into the broking segment as well. So that's what we are looking from. Obviously, my colleagues have already discussed on both the aspects in terms of, the 100% FDI and different insurance company. I feel that is also very, very important. I will just take one example. Like, I was just reading today. So there are some 33 crore motor which is plying on the road right now, but only 10 crore motor are covered. So even if you look at the motor, which is a segment where the insurance is compulsory, if somebody is just able to tap that market, which is the uninsured market, which is compulsory, I think there's a lot of scope. Probably people are not able to reach, the current insurers are not able to reach there. So if you divide the demography and understand which states has which kind of motor cars, and if you just tap that market, I think there is tremendous potential even in that market as well.
I think some data was filed by the government to the Supreme Court which says 40% of the motor are not insured.
So if you take a 33 crore, I mean, the two-wheelers are the one which is more vulnerable in not being insured. So the data says almost 70% of the two-wheelers are uninsured. Right? So people don't fear that the third party is required on a two-wheeler. But that's the market which is very, very easy to tap, according to me.
So your expectation is perpetual license. Do you have a sense what does the regulators think on this?
So what I understand that the regulator has already moved a white paper to the finance ministry, and obviously whenever the parliament starts, and there, the decision will be taken. So from the regulator's perspective,
they are okay with it.
Yeah, absolutely.
Great. Mr. Perpetual, what are your initial thoughts? What changes we need in the Insurance Act?
I think the way to look at it, what the approach that the regulator is taking, right? And I'm sure with inputs from the government that what will it take to really bring in insurance for all, which is the big mantra that is clearly there from both the government and the regulator. And I think what is required to be done. So as Alok mentioned about many more players, but I think within that they're also saying you can have micro licenses, right? So you can have license for a region, you can have license for a particular category of business, etc. So because in composite, they're not saying that you can go, at least what the initial draft was, I don't know what finally is going to happen, is that it's not, you don't need to, for example, take the full, a health insurance player, for example, if they want to go for an element of life, you don't need to do the full life insurance. You can take only term, or you can take only annuity. And you don't need to offer the whole range of offerings. Or if you want to look at GI, you can say, I want to do only motor, or I want to do only home. So I think the sub-licenses, which is very interesting, right? Because then you can decide that I want to take another license, but I want to focus on this segment, which is what has an affinity to my existing market, right? So that's one thing that they're saying. Plus, when you bring in, let's say, an insurer for a state, or insurer only for motor in a state. So I think then you bring in niche players, micro-insurance players with lower capital requirement, at least to start with, and then more people will be willing to test out the concept versus, let's say, committing 100 crores or more that you end up doing, apart from the 100% regulation that Alok and Sumit spoke about. I think the other thing that I look at is that how can we make the insurance sector more relevant for consumers, right, in the respective categories. So they, at least in the initial conversation, there's discussion of value-added services. So let's say for a health insurance company, can I also attach or sell related health services?
Right.
Because then the whole role of insurance will go beyond just final protection, but also an element of other related services. Similarly, in home, can I have other services relating to home maintenance, etc., etc. So I think that can be a big shift
Correct.
if that happens in the way you can present your offering to consumers.
But for value-added services, the acts need to be amended, is it?
Yes, because today I can only sell pure insurance product, right? In value-added services, you can then sell the other related services to the core category. So for health insurance related health category, for retirement, you can offer lots of other retirement services, etc., which doesn't necessarily has a core component of insurance in it, but it's clearly related to the core offering that you're saying. Then suddenly the whole offering as a combination becomes much more attractive, because one of the problem with insurance is what, it's a very episodal, engagement. I buy, I seek a service, I claim, and I renew. Other than that, why would you, necessarily engage with your insurer? But if these services start coming in
Customer
health,
connect.
the customer connect engagement, customer feeling that I'm getting something back for what I've paid.
Right.
So I think that's a big one that we are looking to.
Yes, of course. Mr. Rungta can share some more light on this. I mean, what kind of value-added services the life insurance players generally look at? Value-added services.
No, just to elaborate on what Mayank is saying, there's always a play to create nowadays, if you look at the consumer pattern, they want living benefits. So life insurance in the past was more a death benefit kind of a market. You look at the product innovation which has happened, especially in the last 10 years or so, the customer orientation is more about living benefits. What Mayank was suggesting is those living benefit becomes very important. Now, if I'm selling a term policy, right, and if I can sell someone annual medical checkup, for example, which is to stay healthy, right? It's a great solution to give because the guy is interested in his own life, correct? Now you can do all these kind of different propositions based on what kind of solutions you're offering to a customer. And that's where I believe like Mayank said, the engagement has to be higher rather than making a transaction.
Right.
Today, it's transaction, it is not engagement.
Engagement, yeah.
Right? And that's where the customer experience also changes. See, there are only 4 steps. If you ask me in the life cycle of a customer, I buy, I renew, I transact because there is some changes in my record, or I claim. Right? So these are the 4 transactions which happens. Otherwise, there is no engagement.
Right.
And then we see the entire customer experience and the moment of truths are beyond these 3, 4. But if you have a deeper engagement, which is important for the customer as well, right? For example, I'm saying in the life insurance sector, there's a large portion on savings. What are we doing to help him on his financial literacy? What advisory we give him? Or what enable we can give him, right, to manage his portfolio? Like I'm selling a portion of the financial literacy segment. I'm not selling the holistic value, but can I be one who can actually provide him advisory which is beyond my product suite? Because at the end of the day, we are part of that component of his entire financial planning.
Right.
So there is a lot of such things which can be offered across if structured from a holistic perspective, that when I engage a customer, and look at the composite concept itself, right? When I engage a customer, the same customer, a health need, life need, GI need, at some relevance product level, is there a combined offering happening or not? So that's the theme. And just to extend it, experience in Asia itself, if you go to some markets, like what Mayank was saying, China started with licensing only in provisions. They never had a country license. Now, I'm not saying that you have to make everything current, but that's an option.
Yeah.
If you want to make penetration very high in some states, then you say, okay, I'll give you a license, operate only on this state. Right? In some other South Asian geographies, they have a license only to run agency business, or they have a license only to run a banca business.
Correct.
Right? So you can say, then the capital requirement, the way you monitor and run that business could be very different. And these are models which are prevalent already.
Right.
So we can learn from this, because when you want to penetrate into a particular segment, could be a customer segment, geographical segment, or you want to give a umbrella solution across encompassing, you can do all those things. If you give the flexibility from a capital, risk management, and accordingly license. Look at banking. You have universal license, you have small banking, you have NBFC, you have payment banks, you have lending partners. Right? All in a way are giving you banking products end of the day. But there are different licensing, and look at the penetration in the last 20 years with this structured licensing which has happened in the country.
Correct.
Financial inclusion has happened because you have structured it differently. Your norms are different. The way you manage these companies are different. I'm just saying there's a learning which is possible, which the insurance also can adopt. So I'm just
A
stating that.
structured licensing
Yeah,
policy.
you have a different structure for everything because
Ah,
the way you want to operate or the saying is where you want to play, you
correct,
can define how to play.
right now, there are only
There's one
three
standard,
areas.
yeah, there's one standard. So I
Right.
think regulator is heading towards that. Now that's what will help, I think, penetration and insurance for all slogan, because that's where the differentiation can help.
Correct, correct. Now, coming back to the value-added services, Mr. Mathur, what are your thoughts on that? Are the non-life players equally excited about this value-added proposition?
Yeah, so value-added services, if you say in most of the matured markets are also known as ecosystem services and is part and parcel of the insurance product. So just to cite example, motor insurance, currently we give roadside assistance, which is very half-baked. There is a lot more can be done in conjunction or in collaboration with auto manufacturers or other allied services in auto space. In health insurance, like, wearable devices where one can measure BP or diabetes levels almost on everyday basis. And it is also encouraging healthier lifestyle. So from insurance perspective, it is helping me as an insurer to bring down my loss ratios. If I'm making sure that someone who is probably not so healthy, but I'm making sure that he monitors almost on a daily basis his health, living style, and he's getting healthier, so which is good for me. But it is done again, not in a very uniform manner. Once it gets regulated, once it gets very official, it becomes a norm. Say, for example, cyber, just to cite an example, we have tried doing collaboration or technical collaboration, so to say, with certain entities, those who are providing softwares and creating a shield against potential cyber threats, attacks. But again, it is, I'll say, half-baked. We want to do much more. We want to go just full swing, not only be known as insurers, but also when we say we are there to protect, we are there to create security net. So insurance is one of the elements.
Correct.
So
correct.
we are very, very, again, hopeful. If it happens, then entire insurance ecosystem will become even more wider, more inclusive.
Right.
So which will make even more meaning for customers, those who have not bought insurance yet, because they will, if not see benefit in insurance buying, they will see benefit in buying those ecosystem services where insurance is at the core, but other services might create more meaning for them, more relevance for them. So insurance will go along with, or those things will go along with insurance. So as I was mentioning, creating a lot of flexibility in case we want to reach to the last mile, we want to achieve insurance inclusion or everyone in our country to be insured. Say health insurance is equal to social security, where it is as high as 70-80% in Australia, or even 70% in not so developed nation like Vietnam, but still in our country, it hovers around 35-40%, including all government schemes. So we need to create relevance. We need to show that it is very, very significant to
Correct.
those who do
Yes.
not see meaning yet in insurance.
Yeah. The other important aspect of the aspect or narrative the current times we see is the Prima Trinity. So, Mr. Bora, I would like to ask you, how does Bima Sugam changes the dynamics for the insurance brokers?
So this is, old story. So 4 years back, I was talking to the regulator that time that, as today almost there are 708 brokers, right? And there are very few brokers who have that platform where a comparison could be drawn. And the rest of the brokers do it manually. So for a manual broker, you may need a day to give you a comparative quote between a health or a motor, which obviously from a customer's perspective, he would think that, probably you're too lazy or you're not being able to perform your duties. But unfortunately, that platform with brokers is not there. And the amount of money which requires to be spent on that platform is not feasible for all the brokers. So a unified platform like Bima Sugam was very much required, is very much required, so that the broker's role is not only the quote comparison. Our role is basically more of an advisory and to make sure that the transaction happens. The rest all is, IT enablement. So I think this is a very, very important a piece of element which will enable, in fact, all the intermediaries to make sure that a proper comparison is drawn and the customer gets the right product by distinguishing the products.
Correct, correct. On health insurance, the government has taken several steps in recent times to increase insurance penetration in India. However, retail health penetration is still around 4%. What do you think is the main reason for this, and what are the steps that can be taken to address the issue?
I think we'll have to kind of look at the big picture first before we come to a solution. So if you look at the entire population of whatever 140 odd crores in India, the bottom about 60 odd crores, the government has taken a decision that they'll fund it through the Ayushman Bharat scheme. And they are only extending it. Now they have extended to the senior citizens above a certain age, etc., because they feel that segment cannot afford to pay for what is technically a universal requirement, right? Because if the government has an ambition for universal health care, there has to be a funding solution to it, because not everyone can afford it. And you have to find the financing solution, which is what the government says, we'll fiscally kind of give that. It leaves the balance 80 crores. Of that, about top 35 to 40 crore is where the focus of the current private sector is. So all of the players, whether it's health insurance by the general insurers or by the standalone health insurance, this is where we typically cater to. And then in the middle is about another 40 odd crores is what is technically being referred to as the missing middle by Niti Aayog.
Right.
And the solution for the top two segments are very different. In the first segment is where you're referring to. Bulk of that 4% sits in that segment. So, of coverage, because the bottom segment in any case is not buying, because you're referring to retail.
Retail health.
What you are referring to is about 5.5 odd crore lives that are covered under retail health insurance, which is what the 4% refers to. So how do you take it beyond 5.5 in the top, 35, 40 crores? Let me talk first of the missing section, right? Here, the solution has to be affordability. Unless we are able to find a solution for affordability, this segment will find it difficult to buy health insurance. What does that mean? It means that, that segment probably has income lower than even 3 lakh as a household. And therefore, to pay a 10,000-15,000 rupee health insurance premium, in the current scheme, will not work. So, what does health insurance, and there are different solutions to bringing affordability. It's a long topic. You'll have to reduce the healthcare cost delivery in that, and also reduce the distribution cost in that. Can Bima Sugam be one way to bring that reduction in distribution cost? Because the cost of reaching out and the cost of, for the customer to find the solution will reduce. And we'll have to still find a solution to bring lower cost of healthcare. A big topic. I don't want to take too much time here, but we'll have to find that solution to bring in affordability. Because government has already said GST, if what we are listening,
yes.
Potentially if the GST is reduced, then that 18% goes away from whatever we hear in the news, the proposal of potentially making it zero, then it can bring a big cost down.
No, affordability is a key issue in health insurance sector, isn't it?
For a segment, not for entire. For the top 35, 40 crore people, I don't think so affordability is an issue. There the issue, by the way, apart from the 4%, there's a large segment there which is the working population,
right,
which has got about 15 to 18 crore people are covered through corporates also. There could be some overlap between 5.5 and 16, 18 crore. Let's say it's about 20 crore of people who are covered together after removing overlap. There's still another 20, 25 crore people not covered. There, the issue is not affordability. There, the issue is, do they see value? For example, the younger segment says, why should I pay if I'm not getting in return? I'm not going to be in the hospital. Concept like VAS can make a big difference for them. If the moment you attach a health service, they say, hey, I'm going to consume health service every day. I'm willing to pay for it, and if something happens, I'm going to get cover, etc. So the solutions are very different from each of these segments, because one thing is very clear, Monojita, that awareness has increased after COVID. People understand that this product is required. The question is, am I going to allocate money out of my discretionary spend quota to health insurance or not? Do I want to use that money for an experience of a holiday? Do I want to put that money for an experience of a better phone or something? Or do I have to put that money because I think that risk is real and therefore I must protect myself from that risk?
Right, right.
That is what we have to solve. It's a complex problem, but I think all the steps that are being taken, product innovation, distribution reforms that we are now, I'm sure in the next set of reforms that will come from the regulators, distribution reforms, the changes in the Insurance Act, all of these are going to enable Bima Trinity is going to enable that. Bima Trinity is going to take care of the affordable segment as well, right?
Right,
So
right,
I
right.
think we're on the right track, but we have to make sure that we execute it well
Execution.
for each of these three segments differently.
Yeah, yeah. Mr. Mathur, would you like to touch upon the affordability issue, the affordability of health insurance and how we can address that?
So affordability, especially, is felt amongst underprivileged or in far-flung locations more than metro, mini metros. And to achieve this, we have seen variants of health insurance now, low sum insured products, benefit health products, because we just can't keep pushing high sum insured products or one size product to all categories. And we have seen in tier 3, tier 4 locations also now offtake of health insurance is rising. And sum insured is very low. Coverages are minuscule because we have also seen that health conditions in tier 4, tier 5, tier 3 locations are much better of people, those who are residing in metro, mini metros or state capital because of their lifestyle. So it makes all the more sense and high relevance for insurers to reach out to those locations. So that helps us achieving two objectives: one, insurance inclusion, and making sure that loss ratios remain low, and product are tailor-made in such a way that they remain affordable. So whether benefit products or low sum insured health insurance products or products which could be disease-specific dengue product, for example, so where sum insured or maybe premium will remain low, which means will remain affordable. So offtake of these products are increasing in those locations. I do not see affordability issue in high-end markets. So variant of health insurance products is able to address the situation of affordability.
Right, right. Mr. Rungta, since you are the life insurer in this panel, I have to ask you this, the surrender value norms. That's a very hot topic in the life insurance sector. How do you see those norms? What kind of impact do you see? If you can elaborate.
The beauty of last 25 years is we have resistance to all changes we have been seeing in the industry, right?
Right, right.
So we had a UL product change, we had par change, we have non-par change. So I think the industry has become robust enough to see all those changes. The latest being the special surrender value. I think the market has responded well. If you look at it from a long-term customer orientation, it's a welcome change. Obviously, there are short-term hiccups which all of us are facing, all products went through redesign, the way we look at our distributor and competition through redesign. So, but as I said, industry has been able to embrace it. If you see the October results for the industry as a whole, there's not a big dent which has happened compared to the last October. So in that sense, I think that's baked well. Obviously, any change of that magnitude sends us back on the drawing board mid-year. So that has happened for most of us, if not all. And the people have responded to it. We were discussing about pace of change. Sometimes I feel the regulator is much ahead of us.
Right, right.
And we are actually trying to catch up, with their pace. If you look at many markets, the industry actually lobbies with the regulator to make changes.
Right, right.
Here I feel that we are actually dragging behind in terms of the pace
Because
of
the
change
regulator has to be extremely
which they are
proactive.
driving. So that's the sentiment we believe that is too fast. And also there has to be a period to settle down is what we believe. So that's how we react to it. But I think it's baked in well. The market was aware of what's happening. People on all the three sides, which I say the distributor, consumer and shareholder, have planned the change well. I don't see there is major impact happening. Some segments will lose income. Look at the commission which has gone down, so distributors can feel the heat. Customer, as I said, gain to benefit most of the time because it has to be customer centric. And there is a realignment on how you look at your product design. So that has happened.
Okay. No, since customer service is regulator is very conscious about that. They're sensitive about that, the customer service. So there are recent commentary from the regulator that the claim settlement being the one of the top grievances from the customers. Mr. Mathur, what are your sense on what can we do to address this issue, the grievances on claim settlement?
So, although regulator has played a pivotal role already in terms of categorizing grievances and regular queries which customers make, regulatory intervention is well regarded and is there to support any potential grievance of any claimant. But what insurers can proactively do is that mostly grievances are also an outcome of understanding gap, mostly. Because claims, every insurer would want to settle amicably. No insurer would want to retain money and cut unnecessarily. So there are certain ecosystem issues where supply chain providers, service providers do overpricing at times, and it becomes sort of an additional revenue stream for them. However, that is something which insurance industry is tackling. But from the customer's perspective, when they feel that my grievance has not been addressed, so at the first place, grievance should not arise only. And this happens because a good communication is not being sent. Normally, insurers until now have been sending a claim is repudiated or claim is settled at this amount. But now if detailed rationale can go to them. So regulator proactively has made customer information sheet mandatory where what is covered, what is not covered, not in fine prints, in very readable font so that customers know what is not covered. So understanding gap at initial stage itself reduces. If at all someone has to make a claim, would know whether I am covered for this or not. Second, as claim happens, so along with, and if God forbid any claim which gets repudiated because it is falling outside the purview of the policy coverages. So a very fine rationale if can go along with the repudiation letter, or if there is any reduction in the amount which was expected by the customer. So rationale even for that, if can go, explaining the rationale to the customer, I think grievances will get addressed there. So customer will not raise next level, which is an escalation or in form of a complaint, sending any message to regulatory body or to other various complaint portals. So I think communicating with customer would make a great change, a positive impact in managing whole customer grievances piece.
You want to share some of your thoughts on the grievances?
Yeah, I see. There are three categories of grievances in health, right? One is grievance where people say, why have you denied my claim? A lot of that happens because of two big reasons. One is, has the conversation of what the customer has bought, and therefore has a seller explained, has a customer understood that. A lot of that is because of that, sometimes the benefits are not, explained properly or not understood properly. The other element is because of fraud, waste, abuse, which is a big problem in health insurance. Because, see, the dilemma for us is this. Like, I can tell you as for my company, 96.5% of the claims received in terms of numbers are paid. 3.5% are not paid for various reasons that I'm telling you. I think all 3 or 4 stakeholders have to play an important role in this. Insurer to make sure that what they are selling is well understood through the distributor by the customer.
So in this context, the mis-selling is also a challenge,
It's
isn't
not,
it?
health insurance is not necessarily about mis-selling, Mojita. It's about, sometimes it's not necessarily the intent of the customer, of the distribution to not explain. It's health insurance has an element of what you can't avoid. There's an element of medical complexity, right? Like for example, if you say, and in some economies it's there, this product covers everything from day one. In group business, for example, corporate business, There's nothing excluded. There's no concept of mis-selling right there, right? It's the only reason why you don't hear too many complaints in corporate, because there's no exclusion, there's no waiting period. But if you create that product, it will become extremely expensive because you have to price for what is called anti-selection. People who need will come and buy the product first, right?
Right.
So I think my only plea to everyone involved in the sales process is, if at the sales time, if all stakeholders ensure that they're really understanding what is being sold or what is being bought, a lot of the grievance issue will be sorted. That's one part. And the second part is, please understand, we are dealing as a health insurance industry with an extremely large, fragmented, unregulated segment called healthcare delivery segment.
Right.
We do not have any control on that segment, whatever one might say, because we are paying about 100,000 crore of claims every year through, which we are funding today, maybe a little bit more than that. But do we really control the process there? Our customers are experiencing the healthcare delivery model, but do we really control it? No, we don't.
Right.
And today, about 25% of the claims are fraud-based abuse. What do
I
we
will
do?
come to fraud.
We end up paying everything?
Yeah.
The price will go up, so we'll have to intervene. We'll have to stop that. In that process, we'll have to keep improving our processes. Don't get me wrong. I'm saying we as an insurance industry, there's inefficiency in processing, which we can bring in more technology, AI, ML. I'll give you one example. Our promoters from South Africa, 96% claims humanless, paperless. We export technology to the global. What percent are humanless, paperless in India? Less than 1%, technically, right?
Right.
That can make a big difference in the whole claims experience, grievances, timeline, deductions, etc.
Mr. Vora, fraudulent claims, it's about 20%, 25%. It's a big issue. Of course, there are issues of claim settlement, but frauds are also a big issue. How to address that?
See, I would say that, with the use of technology, the frauds have definitely come down. Means when you talk about health, maximum claims do take place in the health segment, and there is where people would manufacture claims on, and the frauds would take place. But I think from what we experience from our businesses, that the frauds have reduced over a period of time because of the use of technology. The TPA is coming into picture, probably, time and again, they're blacklisting the hospitals which are making fraud. There are enough, red flags which are raised for the people who are claiming regularly. So I think there is reduction in the number of frauds, but obviously there is still scope of improvement, and I think that issue should be addressed for the simple reason, because that could bring the claims down, and probably people who feel harassed at the time of claims, because there's a lot of scrutiny which happens to a normal person also. I think that can go down. So I feel things are moving in the right directions. The numbers are getting reduced. Obviously, there would be an element which will always happen where people, outsmart the insurers or us. So that will always remain. But I think it's pretty much under control.
I do slightly, another perspective. Frauds are not reducing; they are getting detected more than earlier. So what is happening is that you're paying less for what was potentially fraud-based abuse. But if you ask me if 100 rupee is coming, is the amount of potentially non-payable amount reducing? No, it's not. It's only increasing. I mean, if it's another session. I don't want to again spend too much time. It's not. We are detecting better because of what Sumit just said.
Right.
We're able to use technology.
I got it. But the related issue is cyber security. We recently have some news that one insurance company data leak has happened. Are Indian insurance companies investing enough in cyber security? Mr. Mathur, if you can share some light. Then probably Mr. Rumta.
Yeah, so every insurance company, and I believe today every organization in India across sectors, across the globe, have started investing heavily already. So whether it is taking very exhaustive cyber insurance cover or investing in creating enough shield around any potential cyber attack goes without saying. Now, what is happening is because of, lot of unemployment kind of activities which we keep hearing. Like I was hearing Visa doing retrenchment in the current month. About 40% people would be laid off. Likewise, all techies are getting time and who are intelligent. So they are faster than the shield that we create around us to protect ourselves from such people. So what is needed at this juncture is not only investment to have cyber security, but also innovation in that. What until now we have been doing is more prescriptive, because someone, our global investor or global insurer who is a partner in our venture, has done this in their market or markets they operate. So we should also do. So which is a very me too copyable approach. But are we predictive enough that if, say, 1 year down the line, XYZ insurer in India or abroad faced this challenge, and then this progressed and has elevated to NX kind of a level of cyber attack, Y kind of an impact. So two things we need to do. So what it can further graduate to. So we need to think through our cyber security experts, officials in each insurer. So we need to be more predictive to combat these challenges and these attacks. And second, incorporating learning, which I think is currently missing. Suppose if we understood something in collaboration with our global partners, colleagues, what's happening across the globe and what we are doing or what they are doing in predictive spaces, are we sharing or collaborating with our peers in India enough? So that is also missing. So if we do all these things, I think this is equal to or maybe much better than making commercial investments, because commercial investments would be limited to below predictive piece,
Right.
prescriptive more, descriptive more. So this is what is needed more to be done in insurance space at the moment.
Right. Yes, Mr. Gupta.
See, in our case, we are blessed because we are part of the global conglomerate, right? And being subsidiary of one of the largest insurance globally, there are so many practices and insights which come. And at times, towards Sharad saying, we don't see them with our eyes in India, but there is a global context to it always happening.
Correct. Correct.
Right? What kind of cyber attacks happens because of geopolitical issues as well. Sometimes
Right,
we tend to ignore them sitting in our own world, right? So in that sense, we are blessed. Obviously, I do believe it's an emerging field. In our organization, culturally, this is the only field where there is no budget. In that sense, whatever has to be done has to be done. There is
Right.
no second guessing on it. So we have that culture and framework, but I think what Sharad is saying is right, and sometimes that's the benefit of being a global player, that there are laboratories they run, there are environments they are testing in terms of predictive, and like we say in healthcare also, prevention is better than care. I think that's the formula Sharad was trying to educate on this one. But I think we have still not reached, we are just scratching the surface on this.
Right.
Right, as an industry I'm saying, right, because the practices, frameworks, the kind of governance which is needed, I think the awareness has gone up. Is it universal and is it being implemented in that frame is, I think, still a journey.
Right.
Last year the regulators started with doing some audits. You remember the 384 famous codes to be tested and all. It will be interesting to see the results around it.
Right.
So that will tell you what is the level of preparedness. And again, this is only preventive based on what we know.
Correct.
Right? I don't think there is any work happen on as an industry level, right? Or at a regulatory level to see like what are the potential challenges which comes. And see, we are getting into a very complex geopolitical world. So cyber is not limited to only what you see as your industry or organization. It is also
No,
the
of course,
geography
it's
and
a
country
global
and all.
problem.
So there is
Yeah,
a lot beyond one organizations can meet it, right? So,
Correct,
so for me,
correct.
that's the kind of level of interest and investment is needed in that.
Right. We just have time for one question from the audience, if there is anyone. The gentleman in the back, can you give the mic? Gentleman in the back. Yeah, I will come to, yeah. Please introduce yourself and then ask the question. Yeah, please go ahead.
Yeah, my name is Raman Singh. So just on the topic of composite licensing, what will be the implications in the short to medium term? let's say LIC comes into health insurance. So
Yeah,
is
we,
it
we
like,
go.
yeah,
So you want to know the impact of composite license in the short term and the medium term.
I just wanted to understand who will be the creator of health insurance. Like LIC will start creating the product, or will it be like distributor?
Yeah.
So implication on health insurance policies. If
Yes, we'll answer it. Yeah, please have a seat.
Yeah, so what composite license means is that you get the license to manufacture whatever line of business that you seek a license for. So as per the reports, if we have to take that, if LIC is saying that we will get into health insurance, which means that they'll get a health insurance manufacturing license. So they'll be able to sell products, create and sell products of health insurance also. I think when we just discussed the fact that we need many more insurers in each category, right? So I think whether it is LIC or whether it's any other player, the fact is, if you need more players, if it can come from within, that's also fine. If new players come, that's also fine. Of course, LIC is a large player, so it has a large distribution. So it depends on what are you leveraging? Are you leveraging distribution? Are you leveraging your underwriting capability? Are you leveraging your technology, digital capability? So it will depend on who brings what to the market, will define the impact.
Right. One more last question here, please.
Hi, it's Shreyas here from NPCI. I have a quick question on the premium financing aspect that's been recently talked about, right? And it is said that it will essentially kind of move towards creating a more affordable infrastructure for a wider audience, especially when it comes to life insurance. Wanted to understand what the forum's views are on that and how do you see that panning out in India?
Yeah, please.
Yeah, that's the latest buzz in the market, if I can say that. On premium financing, I believe some business house, and again, this is anecdotal, I don't have data or validation to second it, do that with their financing arms. I think it's a very subjective matter because it's financing happening sometimes at portfolio level, sometimes I've heard financing happening at the individual level, right? So it depends what is the objective. It goes back to the same question when the gentleman is asking what will be the role in Combi. It depends on what the organization is looking for.
Right.
Right? What are you trying to encourage? I just mentioned that we are in the business of long term, where we want to have more and more customer engagement enablement. If that is the objective, then you don't want to do premium financing, right? Because you want to engage the customer yourself rather than outsource the management of the customer renewal to a financing company. So I don't think that's the right model, because that's not the objective of life insurance, right? And sometimes when you come with creative solutions, it can actually hurt you in terms of what is the real objective, why are you in this business and what is the objective of the business. So my personal view is very different from what I hear, but again, it's a very nuanced subject. It is getting some traction, I believe, in some locations, some markets, some companies. But let's see how do you shape it up. Financing per se for customer, it's already there in policy. You can take loan from your policy. So from a life insurance I'm talking about, there is a financing option already available, right, within the policy. Obviously, there are nuances in terms of how much you can finance. In a unit-linked product also, it's market-driven, so there is financing possible. There are options on early withdrawals and all. So managing circumstances which are financial constraints in a life cycle of a customer, there are solutions available. Now, people want to go beyond it, and that's where the creativity sometimes comes in, and I don't know, some creativity is constructive, destructive, only time will prove that.
Right. With that, we come to an end on this conversation. Please give a big round of applause to all the panelists here who have taken time to share their views. Thank you so much.